Alright everybody, welcome back. I'm Fabio Mezzogori and I hope you're having a great day so far. In today's video I'm gonna be sharing with you one of the best strategy I started to use back in the days and I still using every single day during my day trading session. And by day trading I mean from the 60 minutes down to the 1 minute, okay? And is one of the best strategy I have ever traded because it's very easy. You just need to know a couple of things which I'm gonna be sharing with you by the end of the video, and also because you have a really interesting risk reward. Okay, so make sure to stay tuned until the end and I will see you right back just after the disclaimer and the intro. Alright guys, welcome back once again. So let me just start sharing with you these two indicators that you're gonna be using for trading this strategy here, okay? So all you need to do, all you need to know is pivot points, okay, and price action, okay? These two are the indicators, if you wanna call it like that, that will allow you to trade this strategy profitably. Let me go a little bit more in detail. Let me just give you a brief explanation about what are pivot points and how the market moves in terms of price action. So pivot points is what is considered to be a leading indicator and one of the most used indicator intraday. What it represents is just, they're just some lines, and I'm gonna be showing you later on, which represent the potential market turning point of the next session based upon today's volatility. So you will have the pivot points, which is the average fair price of tomorrow based upon today's volatility, along with its resistance 1, resistance 2, and S1, such as support 1 and support 2. R1, R2, S1, and S2 are the most common and most used one. Then you've got also the others. You got R3, S3, S1.5, and so on and so forth. However, the most used ones are pivot points, of course, which is the fair price of tomorrow's volatility, along with S1, S2, R1, and R2. So let me just give you an example in the market so you can have an idea. This is the chart of the natural gas. This is the chart of natural gas, but it's the same thing across the board. I trade FX, I trade commodities, I trade indexes, and the concept is always the same. Okay, so just stay with me, even though this is not a Forex chart, just stay with me, which is completely the same thing. And later I'm going to be showing you a chart on the pound dollar, which is a trade that I took a couple of days ago. So as you can see on the chart, you have the red lines, which represents the potential resistance 1 and resistance 2 of, say, tomorrow volatility. You've got the pink line, which in your platform could be another color, which represents the pivot points itself, which is the average fair price of tomorrow based upon today's volatility, along with your S1 and S2. Now, why I consider these and why I call it leading indicator, because let me show you on my platform here. If I do this here, okay, as you can see, this is a leading indicator because it represents something which is not happened yet in the future. As you can see here, this is going to be the next trading session, which will start on Monday. Today is Friday. And the next session is going to be on Monday, so now the market is closed. And as you can see, even though the market is not trading there yet, I already know where these potential pivot points are for the next trading session. So I can already know where the market could be in the next trading session. I'm not saying that the market is going to be there, okay? I'm just saying if the volatility of Monday is going to be the same as it was on Friday, there is a highly chance that the market will trade within those levels right here, all right? With that being said, let me move on and give you another example. Let me move on and give you an example of the price action. So as you can see by now, the market moves, generally speaking, in just 3 different ways. You've got your uptrend, you've got your downtrend, and you've got your sideways movement or consolidation area. Okay, these are the 3 ways that the market moves. There are no other way around, upwards, downwards, or sideways, okay? However, market, generally speaking, won't move in this way right here when it moves in trend, and it tends to move, let me give you an example right here, it tends to move in waves, okay? You've got your swing high, your swing low, another swing high, another swing low, and so on and so forth. If you have studied Elliott, you might refer to them as waves. You've got your waves 1, along with your pullbacks such as wave 2, wave 3, wave 4, and so on and so forth. And the same goes for the downtrend. However, it's going to be the other way around. You've got your swing low, swing high, swing low, swing high, swing low, and so on and so forth. And the same goes for the trading range. Okay, there is no difference. The market will move in these 3 ways here. Now, every time the market changes direction, for example, from, let's say, this point to this point, you need to know that many traders have their orders, stop entry or take profit, or let's say their stop loss around this area here. Some tick above to some tick below. And this goes on and on and on in every single swing in the market. And the same goes for your trading range. You will have some order in this area, some orders in this area, some orders in this area, and so on and so forth. Now, with that being said, all I'm gonna be looking for this strategy here is one of these swing points along with one of our pivot points. Okay, let me give you a real example. Let me share with you again natural gas, and I'm gonna be moving on a trade I took on crude on the pound dollar later on. Now, I'm based in London, UK, so I start to look at the market around 6 o'clock in the morning. So we were about this area here, and just for giving you another example, this time more real, as you can see, let's start from this point right here. So we've got our swing high, we've got our swing low, we've got our swing high, and so on and so forth, okay? So every time the market changes direction from this swing to this swing, creates a point where I consider to be a swing high or swing low. Along with here, this happened again right here, again and again and again. Now, with that being said, we were trading around this area right here, as shown now in the, let's say, extremity here on the left side, on the right side of the chart. So what I will look for is one of these swing points, this turning point, along with one of our levels, such as R2, R1, pivot points itself, S1, and S2. Now, with that being said, let me delete all these lines. Let's start with our R2. So if you draw a line on R2 and you look left, there is really anything. So I'm not interested to take a trade around this area right here. Move on to the new one, such as R1. Again, we have price action going on the left side of our chart, but nothing really interesting. There hasn't been any turning point, right? Now, if we draw another line on the pivot point this time, and you look left, as you can see, the market created a turning point. Another thing that I didn't mention before is that every time the market breaks through one of these turning points, could either be in an uptrend or in a downtrend, the same turning point, which once was potential resistance or potential support, will change. And if it was resistance, it will become support, or if it was support, it will become resistance. With this new knowledge, now we know that this market broke through, let me delete this stuff. We broke through our previous potential support, now potential resistance. So if I draw a line within the area, as you can see, along with our today's pivot points, we have one of our structure level, which once was potential support, now broken, could, okay, and the key words here is could, become resistance. So at this point in time, I already knew before the price was there that was a place where I was looking for an entry reason. So what I did was I placed an alarm on my computer and I just waited the market to get there. Okay? So as soon as the market got there in the same area, at this point in time is where I'm gonna be showing you the trading strategy, because you can decide to take this trade based upon different routes than I do. You can also say, okay, I've got my pivot points along with previous say resistance, or previous support now becomes resistance, and let me place a sell limit order in this specific situation. You can do that. Let's say it's up to you how you want to trade this strategy. Now, however, I'm gonna be sharing with you how I trade this strategy. Okay. So as soon as the market gets to that point, I've got my alarm in the computer that triggers, that pops up the, let's say the alarm telling me that the market is trading there. So what I'm gonna be start doing is drop down to the lowest time frame I usually do, which is the 1 minute chart. By then, nothing really happened on the 1 minute chart that was interesting for me to trade. So we were trading about here now. Okay, nothing really happened. So the time frame I use is the 60 minutes chart, is where I take my signals, okay, where I'm gonna be looking for support and resistance along with our pivot points. And as a trading time frame, I'm gonna be going down from the 1 minute up back again to the 60 minutes. So I've got 1 minute, 3, 5, 10, 15, and 30 minutes. Okay. So as soon as the market gets there, I drop down to the lowest time frame I usually trade, which is the 1 minute. Nothing really happened for me on this chart here, so I decided to move on to the 3 minutes, and nothing really happened there until to this point right here. Okay, this bar right here. For me, this bar signaled, considering its, let's say, its dimension, if you like, compared to the other, is telling me that there is some kind of selling pressure in the market by this time. So what I did after that, actually I saw this market a little bit later than you. However, as soon as I saw the market, which was trading around this area here, I placed my limit order at exactly the same closing price of the bar I was looking for, and there is where I got filled. Now, at this point in time, I am in the trade. I sold, in this case, natural gas, and what I'm gonna be looking for as stops and target is, in terms of stop loss, is gonna be above this previous swing high. So it could be, it depends on you. In this specific situation, I had, I think was, what was that? 88 was 92, about 4 ticks above the high. This is my risk. Okay, we've got 12 ticks of risk on this market, and what I'm gonna be looking for is a target based upon our time frame where I found this trade, such as the 60 minutes. So if you gonna go again back up to the 60 minute, and let me delete some kind of stuff right here. We were trading right around here, and one of the turning point I was looking for was the low of yesterday, which lined up also roughly in the same area with the low of Wednesday. Okay, so we've got yesterday low along with Wednesday low, and if you are going to consider the fact that this was my stop around 1992, my entry was what was that? My entry was here at 1980. My target was down to my target was down to here, okay, previous low, such as this one, okay. And again, as you can see, we've got 4-to-1 risk reward. Okay, so for me, this was an amazing opportunity to be in the market, and I was willing to take this trade every single day and twice on Sunday. Based upon the risk reward that I have on this trade, this is a trade if this is the strategy you want to trade, this is a trade you must be in because you've got an amazing risk reward. You're just risking about 12 ticks to gain 49 ticks, such as about four times your risk. So now, what the market did, market trade down, and I really got filled soon after. Okay, this is my exit point. And as you can see, this is one of the best trade of Friday. Now, I know that it's already about 50 minutes that I'm showing you this stuff, but I want really you to nail down how you can trade this strategy. So let me give you another example, this time on the pound dollar, which is a trade that I took, one on Thursday and one on Friday. So this is the chart of pound dollar. Let me just show you both trades that I took on Thursday and Friday. We were trading around this area right here. Where is it? We were trading about here, and I start to do my top-down analysis and every single day. And just to let you know, my trading routine is gonna do the same thing over and over and over again every single day of the week. I started my drop-down analysis, and I say, okay, let me see where is R2. Look left, and we have our previous structure, one of our turning point. Wasn't the best one, I'm totally honest with you, but it was there, so I consider this to be a potential entry reason if the market wanted to get there. I then, let's say, check the R1, and again, also R1 was exactly on a point I was willing to get involved in the market in the short direction. If we're going to move on to our pivot points, which you cannot even almost see, nothing really happened around pivot points, so I wasn't really keen to take any trade around this area. So I moved on to S1, and again, S1 was lining up exactly with another interesting point, which was really interesting to take a trade off of this level. Then I moved on to S2, and if you look left on S2, there is really nothing. So, as you can already imagine, I placed my alarm in my trading station on R2, R1, and S1. Now, with that being said, I was just waiting the market to get there, if it wanted to get there, of course. So it was trading up and down, nothing happened, and bang, right around 3 o'clock in the afternoon, as you can see, an alarm popped up in my computer telling me the market is there. So make sure and stay, be ready to get involved in the market if something happened. As soon as the market was trading at that specific level, guess what I did? I dropped down to the lowest time frame I trade, which is the 1 minute, and nothing happened. As you can see here, we just blew through our R1. So if you base your trade only off of one time frame, you might not get involved. However, I do use multiple time frame analysis, so I changed time frame and I moved on the 3 minutes, and again nothing happened. So I moved up to the 5 minutes, and as you can see here, we had this bar right here, the last bar you can see on the chart, which was, for me, in the way I backtested this strategy and in the way I trade this strategy, and based upon many reasons. Also in this case, you've got 24 even handle, if you didn't notice before. So you've got 3 different reasons why I was interested to get involved in this market. So for me, the bar that I have highlighted here was enough for me to say this market might go in your direction. So what I did, I placed, as soon as the market closed, I sold that market. I got filled right here. My stop loss was above previous structure swing high, such as here, about 3-4 ticks above. Okay. My entry was here, and again, as target, what I'm gonna be looking for as a target is a test of our next line, such as in this case was pivot points, or another level, another interesting level that we have on a higher time frame, our higher time frame, such as the 60 minutes. As you can see, the level in the market in this specific situation was below our pivot points. So if I was trading this market with two contracts, which I did, one contract would have been taken out at pivot points, and the other contract would have been taken out to my previous structure potential support. So every time I've got the chance to getting out in the market, I will take the chance to get out from that market, especially if you have a good and positive risk reward. In this specific situation, wasn't as good as on the natural gas, because there we had more than 4-to-1 risk reward. Here we have 1.74 to 1, which is again an amazing trade. I would have taken these every day of the week and two times on Sunday. What I was waiting for was the market to go down to my level, and unfortunately, let me just change time frame so you can see better. Market touched my target 1. I unfortunately didn't get filled there, and if you also want to see the time of the day was 6:20, 6:18 p.m. UK time, so I wasn't really trading, and I wasn't, let's say, keen to keep on going and left this trade there overnight. So what I did in this specific situation is I waited the 60 minutes bar to close, and I took, I get rid of the trade at market, and I got filled right around the opening of the 8 o'clock p.m. UK time here. And this time I got, let's say, almost 1.5 to 1 risk reward, which is again a good thing because you have a positive risk reward. If you can do this every single time, you're gonna make money over time. And this is where I close my trade for this specific situation. Let me just give you last example, and then you can go ahead and backtest this strategy based upon you and the way you want to trade this market. This time happened again on pound dollar on Friday. Again, we were trading about 6-7 o'clock. We were already in this area right here. So I start to do my top-down analysis, and I said, okay, let's check our R2. If you look left on R2, we really have nothing that I'm interested. R1, we have something, but I have a rule that the pivot points or resistance supports, call it as you wish, must be within 5 ticks above or below our previous structure higher. In this case, it was more than 5 ticks, so I didn't consider R1. Then what I was looking for was pivot points. I wasn't interested because it was chopped through many times and there is really nothing if you look left. Then I checked S1, and in this case we had previous structure along with S1. Let me draw a horizontal line, you can see better. Again, previous structure was a little bit shy than our S1 at this point, but within 5 ticks, because the lowest point of our structure was 23.05, and the S1 was right exactly on even handle at 23, so exactly 5 ticks, and this for me was a valid trade. So what I was looking, and I've done the same thing on S2 as well. This was another valid trade for me in case the market was willing to get there and trade around the areas. Now, what I did, I placed an alarm in my computer. I just let I let the market be until it got to that point. What I did, you can guess, I dropped down to the 1 minute. Let me see where it is. On the 1 minute, apart from this kind of bar here, which was interesting, but nothing I am willing to risk my money on, nothing happened. So I changed time frame on the 3 minutes. And here things start to get interesting because, as you can see, we've got this kind of, if you like, double bottom, and in the second leg we test the level I was looking at, and we created this kind of massive and beautiful reversal bar. So this for me was enough to say this market could head in your direction. So what I was waiting for this case, considering that this bar is a way bigger compared to all the other before, and this is just experience, I would say. I waited another bar to come again into my favor in order to reduce my risk and increase my reward. And what I did is, as soon as the bar after closed down in my favor, in order for me to be able to reduce my risk and increase my reward, I as soon as the market closed, I got involved in the trade. My stop loss was just about, again, 3-4 ticks below this low. I got involved here, and what I was looking at, again, change time frame, come back to the 60 minutes, which is the time frame I'm looking at for targets and for targets actually. I got my pivot point and I've got my high of the day. So if you, let's change again time frame, let's go back to the 3 minutes so you can see better. I got involved there. The market started to press up into my targets until we had a pullback. And again, as I explained at the beginning, market moves in waves. We had our structure high, structure low, and at this point in time, I was just waiting to do something, and the market bang, rolled over once again, giving me the chance to get out both to target 1 and target 2. If you consider again the risk reward on this specific trade, I think it was about 94, the stop loss. We had on target 1, we have more than 4 times my risk, and on target 2 we have almost 5 times my risk. So let's say that combined we have about 4.5 to 1 risk reward. Again, guys, this strategy, I'm not showing this to impress you by all means, because this strategy works about 50% of the time based upon the way I trade this strategy. What I want you to do though is not start trading this strategy based upon what I showed you today, but I want you to backtest this strategy and make sure that what I said is true based upon the market you trade. I have multiple asset classes in my portfolio and it works very well across the board, all right? Regardless the market, regardless the time frame, it just works, okay, in the way I trade. So make sure to backtest this strategy. If you have any kind of question for me, please do let me know in the comment below. And also, I put a lot of effort into this video right here, so if you don't mind, if you can just smash that like button for me until it turns blue like the sky or like the ocean, that would be really appreciated. And don't forget to subscribe to the channel so you won't miss any new episode moving forward. This is Fabio Mezzogori. Once again, thank you so much for watching this video, and I'll see you in the next one. I hope you enjoyed this video, guys. I put a lot of valuable information here on YouTube that help you to move the needle towards financial freedom or financial independence. So if you'd like me to notify you every time a new video is up, make sure to hit subscribe and turn on notifications so you will not miss any new episode. And also, don't forget to smash that like button for me. Thanks for watching, and I'll see you in the next one.